Have you ever considered hiring a financial planning advisor? This isn't just a casual question, but a pressing matter that over 50% of Americans acknowledge they need to act upon, according to a study by Northwestern Mutual. However, only 35% are actually taking the step to utilize the services of financial advisors. A financial planning advisor, as the name suggests, can help you map out your financial journey, create a personalized plan tailored to your individual financial goals, and provide you with goals-focused guidance. They are akin to a personal trainer, only they flex your financial muscles instead of the physical ones. Alex Choi, the CEO of Finance HQ, is one of the many voices advocating for the engagement of financial advisors. But how does one go about choosing the right advisor? The answer lies in finding a fiduciary. A fiduciary is legally and ethically obligated to prioritize their clients' best interests. This means they must recommend financial products and strategies that are in the best interest of their clients, not those that may earn them a higher commission. However, not all financial advisors are created equal. As revealed in a Business Insider article, there are three main types: retirement advisors, specialized advisors, and general financial advisors. Your choice should depend on your specific needs and goals. If you're within 10 years of leaving work, for instance, a retirement advisor could be an ideal choice. The cost of consulting with a financial planning advisor varies. It could be hourly fees, flat fees, retainer fees, commission fees, or a percentage fee of total assets. While it may seem daunting, remember that the investment in sound financial advice could save you from potential pitfalls and help grow your wealth in the long run. And what's the worst that could happen if you don't hire a financial advisor? Well, consider the case of many athletes and entertainers who have lost all their money due to poor financial decisions. According to financial advisor Esselfie Taylor, common mistakes include not having an end goal for their money, trusting their team too much, and not finding a balance between wise investments and frugal spending. In conclusion, a financial advisor, be it a retirement, specialized, or general one, can provide guidance on various financial situations, help you understand financial products, tax advantages, and insurance options, and ultimately, help you better manage your money. It's a worthy investment, but the choice is yours to make. After all, it's your financial future at stake.